Hey everyone, welcome back to Corporate Decoder, the place where we translate the confusing language of big business for you. This latest amended filing from Kindred Holdings Incorporated might look like just a bunch of numbers and legal jargon. But trust me, there is a real story in here about the company's challenges and how they are trying to navigate them. Stick around as we decode this. So this is an amended annual report, meaning the company filed their original report and then had to go back and change some things. That usually signals something important, and in this case it is about their internal controls and financial reporting. They found material weaknesses as of March 31st, 2025, basically meaning their system for keeping track of their finances and reporting them wasn't as solid as it should have been. They're admitting that their senior finance folks didn't set the best example for transparency, and they didn't have enough people with the right skills in their disclosure team. Also, communication between different departments about how they report their financials was a weak spot. And get this, issues raised through their company hotline were not properly investigated or documented. This is a pretty significant admission. Now let's dive into the numbers. The company reported $15.057 billion in revenue for the year ended March 2025. That's a 6% drop compared to the previous year. They say this is partly because they're reducing business with customers who are not very profitable and also currency effects. In the United States specifically, revenue dropped 10%. They attribute this also to reducing low-margin business and some contracts expiring. Interestingly, their Japan segment saw a small 1% revenue increase in the same period. This was mainly due to expanding the services they offered to customers there. Now, about their profitability, adjusted EBITDA, a measure of how well the company is performing before certain expenses, was $2.516 billion for 2025. That is a 6% increase from the prior year. This improvement is coming from better operational efficiency and higher margins on new deals, alongside a vendor credit. Looking at expenses, the cost of services was 79.1% of revenue in 2025. This is better than the 82.2% reported in the previous year. They mentioned lower depreciation, better efficiency, and a vendor credit as reasons for this improvement. Selling general and administrative expenses came in at 17.2% of revenue, which is slightly down from 17.3% the year before. On the bottom line, Kindred Holdings reported a net income of $252 million for the year. Ended March 2025. This is a big improvement from a net loss of $340 million in the prior year. They say this is thanks to their initiatives to improve efficiency and margins, lower depreciation, and a $138 million gain from selling a platform in Canada. Now let's talk about cash. Net cash provided by operating activities was $942 million for the year ended March 2025. That is significantly higher than $454 million in the prior year, mainly due to those improved earnings. Financing activities show they used $286 million in the year, ended March 2025, compared to $170 million the year before. This is mainly because they repurchased $94 million of their own stock. Speaking of share repurchases, in November 2024, the board authorized a program to buy back up to $300 million of their stock. They've already bought back 2.6 million shares, costing $94 million by March 2025, with $206 million remaining on that authorization. A big part of their cost structure involves workforce rebalancing and site rationalization. For the year ended March 2025, they recorded $114 million in workforce rebalancing charges and $48 million for ceasing to use leased and owned assets. They expect these moves to save them over $200 million a year. Digging into their accounting, they highlight revenue recognition as a critical area. It requires significant judgment, especially with complex contracts. They have to estimate future costs and make assumptions about project profitability. Basically, recognizing revenue on long-term projects isn't as simple as opening a bill. They also have pension plans, and their overall pension funded status was 77% of the estimated obligation as of March 2025, up from 75% the year before. For their funded plans, the status improved to 103% funded. Their intangible assets, like capitalized software and customer relationships, are pretty substantial. They acquired SkyTap Inc. in April 2024 for $45 million, which added about $43 million in intangible assets and $11 million in goodwill. Now, let's talk about the bigger picture. Kindred Holdings is working hard to improve its financial reporting and internal controls after admitting to weaknesses. They are implementing new training and enhancing controls around communication and complaint handling. While the financial results show some positive signs like increased income and better cash flow from operations, the fact that they had to amend their report and disclose these material weaknesses is concerning. It suggests potential issues with financial discipline and transparency at the senior leadership level. Their strategy seems to be focused on shedding unprofitable business and improving efficiency. which is showing some positive results in metrics like adjusted EBITDA. The stock repurchase program also indicates management's confidence in their direction, or at least an effort to boost shareholder value. However, the lingering material weaknesses in internal controls present a risk. Investors will be watching closely to see if their remediation efforts are effective and if they can truly establish a strong tone at the top and robust financial processes. So what is my take? They are making progress on cleaning house by cutting bad business and improving operational efficiency, which is a good start. The numbers do show a path towards profitability. However, the internal control issues are a red flag. It's like having a great game plan but a shaky defense. Until those control weaknesses are fully addressed and proven to be effective over time, there is an underlying risk that could impact investor confidence. We need to see sustained improvements and a real commitment to transparency to feel fully comfortable. It's a company on a reform journey, and we'll be keeping a close eye on it. Alright, that is our breakdown of this amended filing. What do you think of Kindred Holdings' financial standing and their internal control issues? Let us know in the comments below. If you found this analysis helpful, do give us a thumbs up and subscribe to Corporate Decoder for more in-depth looks at company filings. Also join our awesome community over on Discord. The link is in the description. Thanks for watching. See you next time.